Good morning traders and welcome to the canting service. Let's start with the EURUSD that currently is trading at the 107.43 area. The price started to reverse after completing the wave 3. Yesterday we were after around the wave 4 area right here, and we suggest the trade to follow the move up. So we did a nice analysis. You can check the video that we did yesterday. We did some analysis here to plan the setup. The price went to the 107.82 and then started to reverse. The wave 4 that is active right now is expected to retrace less than the 38.2% because we are in the extension. We don't want to see the price coming inside the previous wave 1 area. So actually the expected is that the price will start building a consolidation. Could be a triangle or it could be just a flat, but the expected is a sideways pattern. Once we find the end of the pattern, the next leg up will be active. So something similar as the trade that we did here after the wave 4 will happen after the wave 4 magenta in this case. Now, if we add the FIBO levels for the wave 3 blue, we're expecting the 108.16 as the target for the next move. So we have a nice run between the current price and the expected target for the wave 3. What about the pound? The pound also is pretty powerful. All the waves that we planned yesterday were completed during the sessions. For example, this last leg up at the beginning of the London session was completed, and now is building the wave 4, similar to the euro, the pound this week. So we're expecting today this sideways consolidation for the wave 4 and then this continuation to the upside. While the Aussie is trending, also the wave 5 has started. We also have here the price doing the consolidation. So there is a breakout, throwback, like a double bottom, pretty deep throwback. That's a wave 2. This is a wave 1. This is the wave 2. And we are in the wave 3, 4, and 5. The internal wave count for this corrective will be a double corrective wave, W, X, and Y, where you can label also as an ABC zigzag. It will be fine. You can accommodate a little bit the waves inside, and that will work as well if you want to keep it simple. But here, the most important fact is this beautiful 1, 2, 3 reversal. Beautiful 1 to 3 reversal right there. That's a nice level to place the pen in order, and the minimum target, the previous high, to take some profits, to be able to manage the trade. And another important detail that I want to highlight about the setup is the box that happened right here. The consolidation is also looks like an inverted head and shoulders, but the idea of the head and shoulders is to apply it on market extremes, not at the end of a consolidation, but is the same principle if you want to see it that way. Anyway, this is a box, and here we have that the price did, actually this is not the one that I want to draw. I want to draw here the smaller one. There we go. So the price did the first bullish breakout, because when you were live, you will be likely to draw the box like this, just with the information that you have. You have the breakout, and as we know, then it comes the throwback. The throwback was pretty deep, and the maximum risk for this trade was the distance of the box. Because when we are trading in a sideways range like this one, we have two options. One is to try to trade inside each leg, like buy and sell, or we can wait to see the breakout of the consolidation and start applying our strategy. But in this case, thanks to the Elliott Wave theory, we know the direction. We know that the price is likely to go up. So it's better to wait for the breakout, and there are so many ways to manage this. For example, you can trigger once the price breakouts the box and leave your stop loss below the low. That's one option, one strategy just based on price action. Another one is to wait for the throwback. We don't know how deep. It's impossible to know how deep. Sometimes it just re-enters, or sometimes it just uses the upper side of the box and continues. So that this leg is impossible to know precisely how much is going to retrace. There are some techniques with harmonics that we teach in our course to have some levels, but anyways, quite difficult to know how deep this leg is going to be. And especially this strong red candle is almost impossible to know precisely when it's going to stop. So the price went down, and another way to trigger this setup is at the second breakout of the box, or safer, at the 1 to 3 reversals. For some traders, this might be too late. I really like those entries when I see that the price is confirmed, that is trending to the upside, but that's up to you. That's really personal to find the best level to find the entries after the consolidations. I'm just telling some ideas. And the price now is climbing, so that's the target. If you want more, be careful, but use the Fibonacci levels. So that will be the 77.43. That's the plan for the Aussie. Dollar yen, we know that the dollar is pretty weak after the statement, after the Fed press conference this week that we comment during the whole week. So the dollar yen was likely to continue to the downside, and that is happening. So yesterday we were pointing that the wave 4 was active, the wave 4 green. We have a beautiful impulse on the left, 3, 4, 5. Now it's time here for the wave 4. Okay, there we go. So seems like a pennant, and actually it's a pennant, but seems like a triangle. But in terms of Elliott Wave, can't be a triangle because it's showing only 3 legs. So it's a flat. It's a running flat, actually a running flat, because the C wave on the 4 couldn't retrace 100% of A. So here comes the validation. A leg down, a pullback. This case is a pullback, and we have an internal 1 to 3 pattern, and we have the breakout of the consolidation. Conservative target, the previous low 112.94. Then we expect that the price goes to that level, take out some stops of people who bought, and they have of course their stops there. So that's the wave 5. It goes there to reach as much as they can stop losses on that level, and then it's going to retrace back for the wave 4. And then it's going to do it again. So that's the way to ride the trend. Fantastic. What about dollar CAD? Dollar CAD is showing that the price is getting ready for the consolidation. Actually, this is a little bit lag than the dollar yen. So we are at a better level to plan the trade. So here it comes. We have, this is the trend line. There is the breakout. Here is the pullback, because it's a bearish breakout, so it's a pullback, and we have a double top formation. So a good trade setup, nice trade setup will be to trade below this level. Let me check precisely what we are talking about, 133.11, in order to cover this distance. Okay, to the previous low. That's our advice. If you want more and you want to trade on this area, go for 30 pips at the most, 20 pips, because it's extremely risky. But that's the setup. It's showing a nice consolidation. When the price starts consolidating like this and we have a wave 4 and we have all this momentum, is likely to be the end of the wave 4, but anyway, it's better to trade below this level just to confirm that the trend is starting. And what about the Kiwi, the New Zealand? The New Zealand is doing this 1, then we have the wave 2 blue, and expecting today a strong leg down for the wave 3. So similar to these other patterns, in this case, we're expecting a weak New Zealand, actually weaker than the USD. If it moves below the 69.68, it's going to trigger the leg down, is going to confirm our analysis once the price moves below that level. Yesterday we were explaining the reason why we think is wave 1 and wave 2, so you can recheck the video from yesterday. What about the S&P? The S&P, as expected, it's building the move up. We have a target, a conservative target at the 2401. We found the bottom of this level of the end of the wave 2, as you remember, thanks to the harmonics, because it was a retrace to the 786%, 2359, precisely there it reacted. Beautiful pattern. It did a 1 2 3 4 5 for 1. Here comes the ABC for 2. 1 2 1 2 3 reversal is validating the bullish move right now at this moment with this beautiful green candle, and it's just anticipating the move up. Dow, nothing else to add, is going to be the same, and the Nasdaq as well, building that continuation. What about the German DAX? The German DAX has been showing a lot of volatility during the last hours, but is getting ready also to continue. Here is a B wave. I'm expecting a C wave up for the wave 5. We have just the first leg up, wave 1, wave 2, and we're expecting the continuation. Maybe that for next week because Europe will close soon. This is gold. So for gold, we're seeing that the price has been building this ABC consolidation for 4. We're getting ready to trade above the wave 3 because we think it has a lot of potential to the upside. Here on the 4-hour chart, we can see better that potential to complete this wave 5. Usually, the wave 5 is a multiple of the wave 1, so the target is the 1241. So we have a nice distance above the high of 3 to cover to the upside. And oil has been one of our favorite trades. Yesterday we described as well a nice setup on oil. If you are an oil trader, we think this is one of the best opportunities to follow. So here is the idea. The price went up in a clearly compressing pattern that means that the leg up lose momentum. When we have the price losing momentum during the third leg, is a safe trade to follow. But not at that level, because the price could continue right here, invalidate the wave count, whatever. So we need to find a reversal, at least a breakout of the trend line, if you like to go aggressive on this setup. But if you want to go conservative, this will be a 3-wave sequence after that, and at the breakout of this consolidation, this is the failed, we're expecting like false move up. Anyway, here is the invalidation, not trade yet. And at the reversal, I prefer this level, but if you like stronger emotions, go down to lower time frames and find your trigger before, based on the setup, because our final destination for this leg down is the 47.27. We're expecting the oil to cover all this distance. So it's up to you when you want to trigger, but this is going to be the setup that we are following in order to complete the wave 5. This is going to be the report for today. Thank you for your time. Questions, comments, please contact us. Have a great weekend, and I'll see you soon. Take care. Bye-bye.